Hello and thanks for tuning in to our weekly mortgage and economics segment. I'm Megan Abdelaziz, Real Estate SINY.com's mortgage and economics reporter. The mortgage rates continued on their downward trend this week as the government continues to be partially shut down. The 30-year fixed rate went to 4.39%. The 15-year fixed rate remains unchanged at 3.47%, and the 5-year adjustable rate went to 3.34%. As no new government economic data is being released with the government shut down, we only had the financial markets, 2 reports from the Mortgage Bankers Association, and 2 reports from Gallup.com to look at. In the financial markets, the stocks took a bumpy ride down. The Dow Jones went from about 15,127 at opening bell on Thursday, October 3rd, down to about 14,802 by closing bell Wednesday, October 9th. The S&P 500 went from about 1,692 at opening bell that same Thursday and went down to about 1,656 by closing bell that same Wednesday. The 10-year U.S. Treasury bond yield had a slightly steadier ride between that Thursday and Wednesday. On Thursday, it started at 2.62%, and by Wednesday, it was up to 2.68%. Throughout the week, the financial markets decreased and increased slightly due to investors' worries about what will happen with the government shutdown and the debt ceiling issue. If the government shutdown continues for a longer period of time, the stock markets will most likely continue to fall, and the Treasury bond yield might increase more. This will not only be from American investors' worries, but also from other countries worrying about investing in the United States. The Mortgage Bankers Association released 2 reports this past week, one on mortgage credit availability and the other on their weekly application survey. First, on Tuesday, October 8th, the Mortgage Bankers Association released their report on mortgage credit availability for September. In this report, the Mortgage Credit Availability Index decreased yet again. It is now down to 110.7 and is still from decreases in the availability of interest-only loans and loans that are for more than 30 years. As the index continues to fall, the lending standards for getting a mortgage are tightening. Even though the mortgage standards are tightening, the Mortgage Bankers Association saw more increases in their weekly mortgage application survey. This report was released on Wednesday, October 9th, and was for the week ending October 4th. Their market composite index increased another 1.3%, and the refinance index increased another 3%. As these 2 indices continued to increase, so did the amount of mortgages that were applied for refinances, which is now at 64%. Lastly this week, we took a look at Gallup.com's 2 reports on Americans' views of the economy and the United States. As the government continues to be partially shut down, Americans are viewing the economy and the United States more negatively. On Tuesday, October 8th, Gallup.com released their report on Americans' confidence in the economy for the week of September 30th to October 6th. In their first poll on Americans' net ratings of economic outlook, it showed that 67% of Americans see the economy as getting worse, and 28% see it as getting better. In their second poll on Americans' net ratings of current economic conditions, it showed that now 43% of Americans think the current conditions are poor, while 15% think they are good or excellent. With these new results, it gave Gallup an economic confidence index of -34 for that week. On Wednesday, October 9th, they released their report on what Americans think is the biggest problem in the United States now. The findings in this report are based off of a survey they took between October 3rd and October 6th. Right now, the biggest problem Americans see in the United States is the dysfunctional government. The report showed that 33% of Americans think that this is the biggest issue, followed by the economy, unemployment, the deficit issue, and health care. With nothing happening to resolve the government shutdown and no government economic information until they reopen, we will just have to wait until next week to see where the mortgage rates go next. Thank you for watching. Be sure to like us on Facebook, follow us on Google+ and Twitter, and subscribe to our YouTube channel. Also, don't forget you can read the full mortgage and economic report on trendingsiny.com, which is a division of realestatesiny.com. Realestatesiny.com is a full-service real estate brokerage located on Staten Island. If you're looking to buy or sell your home, you can contact us at 718-966-9669, and one of our experienced agents will gladly help you. If you simply just want to browse the latest listings or keep up with the market statistics, you can visit our website at realestatesiny.com.